There's been so much chatter when it comes to some of the price relief that we're seeing right now, but is this sustainable?
Well, that's a very good question, because there's a decoupling of trends between the oil markets and the large commodity market. Effectively, macroeconomic data, which are predominantly negative, right? Everywhere you look is just bad, bad, bad. And people are saying that it's going to get worse, worse, and worse. And so the macroeconomic data is just killing the oil prices. But the thing is that as we're headed into winter, winter is actually supposed to be a period of high demand. So in effect, in 2022, the highest global crude demand will be in December 2022, which is a traded contract, both an ICE or WTI contract, and both are going down. So there's a massive decoupling in sentiment. Basically, people are fearing oil and basically investing or putting their money into oil because this entire basically aura of doom and gloom that's coming towards us. But it's going to be a bit later. It's not now, it's a bit later, but the now feels really stressed.
So that would appear to be that there's an opportunity there, because if you assume what you're saying is absolutely correct when it comes to the demand really kicking in December, if you assume also perhaps some good news coming out of China in terms of zero COVID, and if you also assume the impact of the sanctions playing through, let's call it from December the 5th, what are you looking at in terms of prices then if we're just talking about, let's say, Brent crude, for example?
Yeah, for ICE Brent, I think the natural corridor would be 90 to 100. So the 84 or 85 that you see right now is undervalued. Again, think of the global picture without the bad news. Look at the good news. India is coming out of the monsoon season. Monsoon season is the lowest demand in the year. China is ending its city lockdown. So basically, China is finally ramping up its demand that basically it has never really picked up in 2022. Chinese inventories are also low, so China needs to buy. So effectively, in all of Asia, you have a very, very conducive environment. And no one seems to be noticing that. So you see...
but they're also sourcing from Russia at a deep discount, right? So isn't there... I don't know how this works, but isn't there some sort of back-end adjustment to that, to pricing from that, where two of the largest oil consumers are actually getting their oil at a very cheap rate, much cheaper than the spot market out there?
But I think that this should, in fact, do the opposite. If there's an illicit trade, right, you just push it aside and not care with it. What you look at is what you can trade in the over-the-counter markets, and those over-the-counter markets are tight right now. Also, think about Russia. Like the entire story of December the 5th kicking in, again, is not taken into consideration. Most analytical companies, ourselves included, expect that Russian production will decline. As a consequence, Russian exports will decline. So this is untenable on every single front, but someone needs to notice.